You're wired in. SmallCapVoice.com. Following is a presentation of SmallCapVoice.com, today's leader in investor relations, capital formation, and retail support. Now, with your online business briefing, SmallCapVoice.com's Stuart T. Smith.
Well, everybody, thanks so much once again for joining us here today at SmallCapVoice.com. And as you just heard, I'm your host, Stuart Smith. And we're speaking once again today to Tootie Pie Company Incorporated. The company's traded on the OTCQB under the ticker symbol TOOT. And we're joined once again by the President and Chief Executive Officer of the company, Don Merrill Jr. Don, how you doing today?
I'm just fine, Stuart. Thank you.
Well, thank you so much for your time once again, as always. Listeners, let's go over these numbers really quick. Just recently, it was announced by the company over the summer, annual sales had jumped 20%. Retail sales were up 88%. Since then, the company's announced that June sales are up 42% and July sales are up 26%. Today, we're talking about a press release that hit the wire August 29th. Tootie Pie Company quarterly revenues up 46%. So, Don, you've had a tremendous year. The company has executed on the business model it set forth over a year ago. You've got your accelerated business plan in full gear. The company still isn't turning a profit yet, and to the naysayers out there that may say, well, look, this company, they have all these revenues, they keep increasing, but they're not quite hitting the mark yet, I would think that maybe that's an ignorant statement. What is your thought towards that?
Well, you know, it's certainly a valid point. We all want our companies and the companies we invest in, companies we run, to make money, and certainly that is something that I'm keenly aware of. And what we recognized some time ago was that we just weren't going to get to the revenue numbers that we needed to get to quick enough, especially, and not making excuses for it, but, you know, we had to endure a recession, and frankly, as small businesses, we're all still, even large businesses, we're all still dealing with a less than enthusiastic economy for the last couple of 3 years. But, you know, you can sit there and become a victim of that, or you can make another move. And we made another move, and we went into the cafes. And it was a bold move. Our new investors certainly provided the capital for that. And it was a bold move, but it was one of those moves when you launch into a new business. I think most business people recognize things are going to get uglier before they get better. And that's a period that we went through at the fiscal year last year. You know, we had to, when you buy all these cafes, you have to book those expenses. I view them as investments because they are buying something that's going to produce a return down the road, we think. And I think that what this quarter does is it begins to show the benefits of those. The last quarter, the last fiscal year, and press releases that you talked about at the outset, I think showed it a little bit. Retail sales jumped 88%. That's a big deal. Why is that a big deal? Well, because those are higher margin sales. And as we shift away from wholesale, percentually more to retail, you should affect the bottom line with that. Well, how do you shift more to retail? You don't just wave a magic wand and say, golly, I want to sell more $35 pies than I do wholesale pies. How do you make that happen? You have to have your own distribution effectively. You got to cut out some of the middlemen. You got to go directly to the customer, and that's what we've done in the cafes. So it was a big gamble, and it was a bold gamble. But it was part of the reason that we got $1 million in new equity from our investors was to do is that, you know, these guys are sharp investors, and they're not putting that money in there to just sit and watch it draw interest. They want to see it produce. And we added 4 new cafes, taking our number to 5. By the holidays, we'll have 7, and those cafes are selling retail pies. And what we saw in this last quarter is a beginning of that to start to impact the bottom line.
Well, and one can expect, I would assume, by looking at past performance as we reach the holiday period, that the wholesale market or the standby revenue for the company is also going to increase. And really that's kind of what we're seeing here, is that the benefit of the cafes has helped you to, as you say, remain fairly flat to last year when you talk about the bottom line. It's only a difference of $10,000. Now, with all the capital outlay for these cafes, as well as the capital outlay that you do every year for your pre-holiday inventory, It does seem like the business model is starting to kind of reduce the effect, if you will, of the cash outlay, and thereby we're seeing a smaller difference in the net loss that the company is making each quarter.
Well, that's true, and I'm glad you point that out because that is spot on. You know, we've got a higher amount in inventory. Of course, we also have 5 cafes, and those cafes have to carry inventory, and their inventory is not just exclusively pie. Each cafe has a startup inventory that we buy from our wholesale distributor, and of course that runs from the meat that you use to make sandwiches to the cups, paper, and paper napkins and things of that nature. So each cafe has its own inventory that it has to maintain, and we have to reorder every week. They order their groceries, and included in that order are pies. Then we have beefed up our pie inventory going in the holidays this year. Last year, we were looking for capital to help us do that when we met the Dawson investor group, and then we accelerated our buildup of inventory after we got their investment. This year, we already had some of that investment, and so we began the inventory buildup a little bit sooner, which is better for our employees. It's better for our cash management. But something else that I've learned as a CEO really well here during this season is the benefit of the cafes every day, day after day. They bring cash in, and that gives me cash management opportunities that I didn't have in the past. And so it's allowed me to be a better steward of the money. It's allowed me to use it more wisely and to work with our vendors and things of that nature. So we've got a larger inventory of finished goods and pies than we've ever had at this time of year because we anticipate a better holiday season. I mean, we should have 7 cafes. Those cafes, we have our own internal numbers as to what we think they should sell in terms of whole pie and sliced pie. We've seen them sell whole pie and sliced pie throughout the year in non-holiday seasons when it's 109 degrees outside in Texas. They're still selling whole pies and sliced pies every day, and that's a beautiful thing. And so we've been able to extrapolate that out internally, and we've built up a larger inventory in anticipation of those sales. And you're right. We've started to see a pickup in wholesale and corporate. Our corporate orders are coming in sooner this year than they have in a long time, 2 to 3 years. And we're excited about that. We got a really big order in this week, as a matter of fact, a corporate order. So, in fact, my corporate salesperson just brought it to me 30 minutes ago. So we're seeing a pickup in corporate orders, and we are starting to see a pickup in wholesale. And that's great because we're not spending money on wholesale anymore. We're not doing all the food shows. We don't have a broker in the middle of it anymore. That's been disclosed in our filings. And so we've removed some of the middle people involved in wholesale, which should make wholesale a little bit more productive to our bottom line. But the real story is the shift in income to where we're selling more retail pies. And I think that is what impacted this quarter and made it a little bit better than some folks might have been looking for, is we've sold more retail pies. And that's going to continue and increase as we add 2 more cafes in very high-end neighborhoods in Dallas, Preston Royal. It doesn't get much nicer than that. And Dallas is big money, and we're excited about that location. And Austin Westlake, similar, very, very affluent community. We're excited about being there just a few doors down from one of our best-performing grocery stores during the holiday season. So we've got 2 locations that are coming that should be very successful. And of the 5 we have right now, they're all doing very well. 3 of them, of the 5, are just doing fantastic. And so I'm very pleased with our cafes, and I think they're going to continue to have a very meaningful impact on our bottom line.
Well, the headline out today, listeners, once again, Tootie Pie Company quarterly revenues up 46%. If you'd like to learn more about the company, you can do so at tootiePieCo.com, or, of course, just visit us here at smallcapvoice.com. We have interviews going back well over a year. You can follow the flow of this company and see how the company has laid out its path to increase revenue through its accelerated business plan. And it looks like the company is hitting on all cylinders right now. Well, Don, as always, thank you so much for your time here at smallcapvoice.com.
Thank you, Stuart.
All right, for Don Merrill Jr., this is Stuart Smith saying thanks so much for listening.